In the past 24 hours, we saw Bitcoin and the Nasdaq and also the major indices falling off a cliff. We saw huge rallies in gold, the DXY, and oil, as well as the VIX. I'll go through what actually happened and what you need to look for. Let's run the numbers. If you're new, a very warm welcome and welcome back CTKS family. In news just in, Iran officially declares a state of war against Israel. Israel's Iron Dome stopped absolutely nothing. The hypersonic missiles went through. The Iron Dome has been a good defense mechanism for Israel, but not this time. And in response, Israel says, yeah, we're going to launch heavy bombings across the Middle East tonight. When wars break out, there are typically a few days of negative price momentum. It really depends on if the economy is in a recession or it's just humming along. The key to understand, some of these hits that occur inside markets, they actually don't last very long. The vast majority last less than a month. So we tend to see when market shock events occur, an average on one day, negative 1.2%, total drawdown of the S&P 500 about 5%, and the bottom typically gets hit, and of course this is an average. If we took out the Pearl Harbor attack, that would be an average of much less, because adding an average into that 143 just distorts everything. Welcome to moving averages. People are incredibly resilient, and what you actually find, despite years of war to come, in the 1940 to 1945 mark, the market bottomed in mid-1942. But typically what happens is something like this. Everybody just gets that red day and they run fleeing from the markets, only to be pulled in and then whipsawed. You want to actually reverse your behavior, and I know it's really difficult, but if you can master it, you will make a fortune. That is, you want to BORSOG, you want to buy on red and sell on green. That will work in any market condition. Okay, war in the Middle East. Unfortunately, it's not over. 45,000 US port workers have officially gone on strike from Maine to Texas. Look at all these areas. That's a bit of a problem. And what do they want? They want a modest 77% pay increase and a contractual ban on automation forever. They're very underpaid. They only get $147,000 per year plus $35,000 per year in healthcare. I don't know about you, but I think I'm going to go and work at the dock. Okay, war strikes, breaking of supply chains. Okay, it can't get any worse, can it? Oh yeah, it's getting worse. The Teamsters are likely to join in on the fun. There's nothing like a good crisis to squeeze out extra dollars, and shipping delays, shortages, and price hikes are just the beginning. If you're in the US, I would suggest start stocking up right now. The fear gauge of the main market did pretty much exactly what we anticipated in the last video. It spiked up until that area, pulled back, and then spiked again. One thing that you want to be aware of, the VIX is potentially just starting to get going. A lot of people say, buy the dip, buy the dip, buy the dip, but the dip keeps on dipping. Why is this? Because they haven't figured out how to read the charts correctly. And if you've been doing your cheat sheet, you already realize that there was a lot of risk inside the market, and hopefully you took steps to guard your portfolios. If not, it's never too late. And when we look at the futures of the S&P 500, they're currently coming down. The Nasdaq futures are coming down. The Russell 2000 are coming down. The Dow, Germany's DAX, Nikkei's Japan Index, and the ASX is coming down. You're going to get a lot of wavy-based price action inside the markets. These retracements can make you an absolute fortune, but you must know what you're doing. We're not surprised at all that the DXY absolutely went ballistic. When the DXY goes up, it's like people are taking their money out of the markets and throwing it under the bed. That's one way you can think about it. And when they're doing that, the money is just not flowing into the markets. And what do we know about Bitcoin? Bitcoin is the canary in the coal mine. That's why it doesn't matter what market you're in. If you have a philosophical bent against Bitcoin, your portfolio will be bent in the process. It's much more important to look at the signals. And what do we see here? As the DXY went just ballistic, unfortunately, Bitcoin went in the other direction. If the euro dollar is weakening, expect Bitcoin and the stock markets to weaken. That's why it's very important to look at Forex. It gives you a really, really good understanding as to where things can go. Inside the crypto market, we've seen literally over $500 million worth of liquidations, and unfortunately the majority have been long. If you've been looking at liquidations recently, it was very lopsided to the long side. The longs was just begging to get wiped out, unfortunately. But if you can read financial markets, you already knew that this was happening, and it was a potential. What we're seeing here is we're getting a big spike up. Generally, when you get enough of these big spikes up, the market tends to just consolidate. It could go down a little bit, but it tends to just waver around. So just be aware of this factor. Hopefully, we'll get up into the billions of dollars of liquidations. Why do I say hopefully? Because that's where markets reset. Where could these market resets actually occur? One of the things that we noticed recently, US liquidity was coming out of the market. We've seen it starting to come back into the market. Well, I expect in about a week we could hit a potential either bottom or short-term bottom and get a very nice reflection from that. People are going to celebrate this big increase in US liquidity until they figure out it's not that big, at least not yet. Just be aware, if we get a follow through with the VIX, and that actually is quite likely, unfortunately, we would expect negative momentum inside Bitcoin and of course all of crypto and also the stock market. But don't forget, these are the times that you actually want to get in, especially if you're an investor. A lot of people just want to buy the bottom. Please don't think that way. There is no bottom. Another thing to note, although we had a bit of a spike in oil prices because of all of the tension inside the Middle East, just be aware that these spikes, they don't last forever. We know no alt can escape Bitcoin's gravity. If Bitcoin is coming down, what is Ethereum doing? And you see that blue line, that is Bitcoin. It's coming down. It's just going to move with Bitcoin. Some stronger, some weaker. Some over-exaggerate, some under-exaggerate. But what about Binance Coin coming down? Solana coming down. A lot of people say, why is Solana selling off? I don't understand. Where's the news event that makes Solana sell off? Financial markets are not like that. People just think that the news moves everything. It does not. The news is generally a bit of a setup, so please be aware of these factors. What you want to do is to look into the actual reality of the market. Where do you find the real stuff? Not the stories, but the real stuff. Inside the charts. That's the only place you can find it. In times of negative market momentum, you can get really, really negative. Unfortunately, it's not about one party trying to wipe out another party. It's just literally about knowledge. That's it. The key is to just get into the high skill zone. Know the charts are intercorrelated and interdependent. Understand the structure of what you're looking at. Have an abundance mindset. It doesn't matter if the markets are going down or going up. There are always opportunities. Focus in on price reality. Price reality is not like story-based analysis. Story-based analysis is like this. It's either going up or going down, and there's no gray area. That's absolutely false. High skill and high knowledge people inside the markets know the price just moves in a wave. It's going up and down all the time. And therefore, we just need to take advantage of those ups and downs. That's as simple as it gets. To successfully navigate financial markets, just always remember rule number 1. Only knowledge creates profit. Knowledge comes from experience, so you have to actually go through the hard knocks. The key is, when you get a loss, always learn the lesson that was hidden inside that loss. That's how you get your knowledge. You've actually paid for it. Make sure that you learn from it as well. Having been inside financial markets for nearly 4 decades, when I learned that, it was an absolute game changer. When you get a loss, you get a lesson. Therefore, you can call them lessons. When you get a lesson, do something about it. Just learn how to do better next time and focus how to implement whatever you learn the next time. The path to mastery is not an easy one to walk, but when you understand that the structure causes the price waves, and you can look into the Tier 1, Tier 2, and Tier 3 charts to see the health or otherwise of the markets, everything will change. Have a great day or night ahead, my friends, and the secret word today is BORSOG, buy on red, sell on green. Kate and I look forward to catching you again in the next video. Bye for now.